I mean, everybody's been so focused on these work from home, stay at home, lockdown, whatever you want to call them, stocks. And now we can see the sort of the finish line and people are adjusting. Why not just find companies that'll do well in whatever weird world we may find ourselves in?
Give you a hypothetical scenario. Let's say over the past year, somebody's been in hibernation and hasn't been around to see what's been going on. If they wake up today and they took a look at the stock market and take a look at the economic numbers, for the most part, they would say things are looking pretty good. They'd have no idea that a pandemic was going on. But let's just say they walk down to Main Street, walk down and see these mom and pop shops, start talking to these small business owners. And as they're talking to small business owners, they'll see there's a lot of red flags and issues. So instead of betting on stocks that are going to do well if we open back up, or companies that are going to do well if we don't open back up and we shut down again and the vaccine doesn't prove to be as effective or doesn't get released in time, I'd rather bet on stocks that have been doing well both pre-pandemic and during the pandemic. And one of those sectors, for example, is e-commerce. The e-commerce trend is here to stay, whether we shut down or keep things open. We just saw the holiday season come around, and we saw 20 to 30% growth over last year of holiday online sales. So I think the e-commerce trend and these types of trends are here to stay. I just watched the old Wall Street movie from the 1980s with Charlie Sheen in it, and one of the quotes in the movie is that you should bet on sure things. And he was using that in a different context, obviously, but I think this is a sure trend and sure thing that you want to bet on.
So we've been on Blue Star Airlines, Anacott Steel. Okay, first
Right.
off here, Luke, by the way, if somebody had slept through the pandemic, I would say lucky them, by the way. They fell asleep on March 11th and are just waking up now. I get the e-commerce thing, and I'm not knocking you, but I'm so tired of hearing about the same old names, right? All we hear about is Amazon and Shopify, and everybody's going to do this and that. Give us a new name.
So it's really important to get into the smaller cap names. I think we're seeing that right now with this big rotation out of the big names like Apple, Amazon, like you mentioned. Apple, Amazon, these big tech names, these big stocks were considered the safe haven of stocks for a very long time because everybody knew they weren't going to go under during this pandemic, and that's why we saw all the money flock into them. But right now, like I said, we're seeing that rotation, and one big name that we like is Stamps.com. Essentially, as small businesses transition to this online presence because they need to adapt, and as these more packages get shipped out all around, Stamps.com is going to do well. I mean, they're there. I mean, to summarize the stock, the more packages that get shipped, the better Stamps.com does.
It's not a name that a lot of people talk about. What exactly is it, aside from the fact that, yes, we're all going to mail more stuff going forward, that you like about Stamps.com? I mean, you hear their commercials 100 times a day, Luke, but what about the equity that is attractive?
Yeah, absolutely. So when it comes down to these small businesses, that's really the growth area. So I actually have a buddy that's in the small business realm, and he packages clothing for his store. He sells clothing online. And what's happening with Stamps.com is they allow it with the ShipStation platform. They allow you to go ahead and enter all the SKU numbers, and they really make it efficient to go ahead and do that for small businesses. That's really the growth area down the road. But Stamps.com, like I said, when it comes to this trend, it's really important to consider these smaller cap names that not everybody's pouring their money into. I mean, Stamps.com was trading at around $300 a share. It got cut down to $185. So I think that's a really good value prop where it was trading at a couple months ago.
Shepard Smith here. Thanks for watching CNBC on YouTube.